Is the Fed going to break housing? Perhaps. Jay Powell may have no other choice but to push down asset prices, creating a reverse wealth effect in order to fight inflation, and the data suggests he's doing just that. Hello, ladies and gentlemen. I hope you're all doing well. Welcome to the channel. Today we're going to cover new data from Realtor.com and CNBC. There's so much information to unpack here. Thank you so much for tuning in. One caveat, I'm a Florida, Georgia real estate broker, not a financial advisor. All right, let's begin. Per CNBC, Fed minutes point to more rate hikes that go further than the market anticipates. Fed minutes released Wednesday indicated that officials are prepared to move ahead with multiple 50 basis points interest rate increases. In addition, the Federal Open Market Committee said that policy may have to move past neutral and into restrictive territory. The minutes indicate that members are hopeful they can bring down inflation, but also concerned about financial stability risks, and the article goes on to say, Federal Reserve officials early this month stressed the need to raise interest rates quickly and possibly more than the markets anticipate to tackle a burgeoning inflation problem. Minutes from their meeting released Wednesday showed. Not only did policymakers see the need to increase benchmark borrowing rates by 50 points, but they also said similar hikes likely would be necessary at the next several meetings. They further noted that the policy may have to move past a neutral stance, which is neither supportive nor restrictive of growth, an important consideration for central bankers that could echo through the economy. And it goes on to say, most participants judged that the 50 basis point increase in the target range would likely be appropriate at the next couple of meetings, the minutes said. In addition, Federal Open Market Committee members indicated that a restrictive stance of policy may well become appropriate depending on the evolving economic outlook and the risks to the outlook. As you can see from the Fed minutes, the Fed is getting far more aggressive with their fight against inflation, ultimately taking its toll on the housing market. Not convinced? Let's go over this breaking data from Realtor.com. Breaking news from Realtor.com. Pending home sales dropped 3.9% month over month in 6 straight months of declines. Contract signings for existing homes declined for 6 consecutive months in April, with a 3.9% drop as real estate markets feel the pressure of record high prices and rising mortgage rates in April. The median listing price reached $425,000 during a month when mortgage rates rose over 200 basis points, higher than the prior year from about 3.0% to 5.1%. Many would-be buyers found that the opportunity to afford the required mortgage payments on a home had slipped out of their grasp. The monthly decline was propelled by drops in all regions except the Northeast. Pending home sales were 9.1% below year-ago levels. The decline points to a noticeably slower sales season ahead. And it goes on to say, the spring real estate season has become more turbulent this year as a trifecta of higher inflation, surging interest rates, and rising prices clipped the wings of the market, riding high on the overheated current from 2021. In addition, the number of homes coming to market is making a rebound as homeowners are ready to move beyond the pandemic and also cash in on sky-high equity. These strong cross currents are cooling demand in visible ways. Sales of both new and existing homes have been tumbling in the past several months, a clear indication that markets are adjusting to a new normal. Contract signings for existing homes declined for the 6th consecutive month in April, with a 3.9% drop due to high prices and rising mortgage rates in April thanks to the Federal Reserve Bank. Mortgage rates are up 200 basis points from a year prior, the fastest increase in decades, and you can thank Jay Powell for that. And with that, let's continue. Housing market boom is over as new home sales implode. Here's what to expect from prices this year. New home sales unexpectedly plunged much more than economists projected, and for the 4th consecutive month in April, according to data released Tuesday, adding to signs that the once booming housing market could be due for a steep turnaround. About 591,000 new single-family houses were sold last month on a seasonally adjusted annual basis, plunging 16.6% below the March rate of 709,000 and falling sharply below analyst projections of 750,000 the Census Department reported on Tuesday. In short, the party is over. Pantheon Micro chief economist Ian Shepardson said in an emailed comment after the report, pointing out the collapse in sales follows a steep downward trend in mortgage applications as mortgage rates start to rise on the heels of the Federal Reserve interest rate hikes that started in March. And it goes on to say, the monthly payment required to buy a home has risen by about 50% since September, with about 2/3 of the increase due to the spike in rates, says Shepardson. The average 30-year fixed-rate mortgage has climbed to 5.25% this month from 3% just 1 year ago. New home sales are down 16.6%, a massive miss compared to the expected estimate of 1.7% decline in sales. New building supply has increased to a 9-month supply compared to a 6-month supply the previous month. Continuing on. Per CNBC, home listings suddenly jump as sellers worry they may miss out on the red-hot housing market. that the supply of homes for sales jumped 9% last week compared with the same week 1 year ago, according to Realtor.com. Real estate brokerage Redfin also reported that new listings rose nearly twice as fast in the 4 weeks ending May 15th as they did during the same period a year ago. Pending home sales, a measure of signed contracts on existing homes, dropped nearly 4% in April month to month and were down just over 9% from April 2021, according to the National Association of Realtors. Do you think the market is shifting in favor of would-be homebuyers? Let us know in the comments. Okay, so today's takeaway. Sales of new homes are down 16.6%, a massive miss compared to the expected estimate of 1.7% decline in sales. New building supply has increased to a 9-month supply compared to a 6-month supply the previous month. The supply of homes for sale jumped 9% last week compared to the same week 1 year ago, according to Realtor.com. Contract signings for existing homes declined for the 6th consecutive month in April, with a 3.9% drop, as real estate markets feel the pressure of record high prices and rising mortgage rates in April. Moreover, the Federal Open Market Committee said policy may have to move past neutral and into restrictive territory. And finally, the Fed is taking on an even aggressive stance with rate hikes in order to fight inflation, and with that, they're going to take down the housing market with it. If you like this video, please consider subscribing to the channel and hit that like button. I'm a Florida, Georgia real estate broker, not a financial advisor. Thanks again, and we'll see you in the next video.